Oil prices have been extremely volatile in the last few weeks and months, more than has been seen in 30 years in terms of the fluctuations. And that's representing the fact that the market is quite tight and really the spare capacity is not there. So I expect it will be volatile for the next few months, especially with so many unknowns about, Trump and China on the trade dispute, what will happen with, the Iranian sanctions. But fundamentally, I think demand is strong, and I expect prices in this range, $60 to $80, which is good enough to sustain investment. Although we need to do more investment, and especially in the Middle East. So I think that discussion really has been going for some time, and we need to differentiate between energy for transportation and energy for electricity. So for energy for transportation, really the oil demand growth is not coming from passenger cars so much as from trucking, from air. More than 80% of the world haven't been on a plane yet, and that's going to continue to grow, especially in Asia. And petrochemicals, plastics. But then on the electricity side, natural gas is a very important complement to renewables. And the UAE strategy for 2050 is putting equal balance almost on renewables and natural gas, 40% each for the electricity generation. So we need all these forms of energy, as the UAE has recognized, and the energy mix and transition is going to be an important part of the agenda here in Davos and beyond. What happens in China is of course very important, but 6% growth is still substantial. I think it's interesting in China they're willing to maybe give up some growth to have cleaner air. And cities like Beijing in China or Delhi in India, the air quality has become a very important political issue, and you're seeing the switch from coal to gas and renewables to have cleaner air. So I think generally there's some concern, some caution about the economic outlook, particularly these unknowns in government hands, whether it's geopolitical conflict in the Middle East or trade wars on a global level between US and China. But generally, I think a sense of optimism, and I think business becoming more and more responsible and adopting a sustainability agenda across all sectors and all parts of the world. So I think what we've seen is record low bid prices for solar, projects in the UAE and elsewhere, and then technology in companies like ADNOC has taken priority in terms of reducing costs and raising efficiency. And I think you'll continue to see that, as well as looking for new investment models to involve the private sector more in the growth. So we've just announced we've increased our production in the north of Iraq by 40%. We're looking to double that again. We're looking at other interesting opportunities in the area, in Oman and North Africa. We were awarded 3 new blocks in the southern part of Iraq recently in a bid round. So our region has half the world's oil and gas, but only 1/6 of gas production and 1/3 of oil production. So there's still a lot of untapped resources, but we need to also invest more, because in the last 4 or 5 years most of the market share growth has been taken by US shale, and Middle East should be the most competitive and most cost effective.